Hi, this is Jeffrey Kurt Financial Group. Today is Monday, August 4, 2025, start of another week and continuation of the start of the month of August. Looking back last week, tough week for the stock market with a late week sell-off from the peaks of Thursday morning to the depths of the sell-off on Friday afternoon. It was about a 3% loss for the S&P in about a day and a half. And again, Thursday morning, stocks were up on the Microsoft and the Meta earnings news, and then just sold off on again rest of Thursday and again on Friday. We're up again today, though, kind of recovering, and I think that looks like there was quite a bit of selling and pessimism kind of being priced in on Friday. So a rebound right now, we'll see. The upcoming week really doesn't have a lot of economic data. Tomorrow morning is the ISM, the Institute of Supply Management, Purchasing Managers Index for the services side of the economy. That's a pretty big number. People will be looking at that for expansion, contraction indications, again, amongst the purchasing managers. But last week, stocks did have a rough week. The Dow was down about 3%. The Russell was down 4%. S&P and NASDAQ were down a little over 2%. Year to date, all the averages still up, except for the Russell. Russell's down about 2.5%. Dow's up 2.5%. The NASDAQ is up about 7%. S&P up about 6%. So, where does that leave us? There is some history in the month of August that there can be some turmoil and volatility. We'll see what that happens. Bond yields have come down recently, the last couple of days, and now there's increased expectations of a Fed interest rate cut in September. Not sure that's how it's going to play out, but again, the markets are reducing interest rates right now in the secondary market, and see if that it does give room for the Fed to cut in September. I want to leave you with some information about the S&P 500, and again how concentrated it is. You think if you're buying the S&P 500, you're buying 500 companies, and it's a diversification purchase and all that. It's really not. The top 11 companies, I included 11 because the tie at the 10 and 11 are both tied at 1.6% of the index. But these companies now comprise over 39% of the market. And I'll give you a pie chart here to kind of show you how dramatic and how concentrated the S&P 500 is now. Only 53% is kind of this other. So you're not really buying about 500, could be really buying about 40 to 50 companies. The leader is NVIDIA at 8.1%, and then Microsoft second at 7.1%. There's 15% in two companies. Apple 5.8%, Amazon's at 4%. So again, it's an historic development that there's this much concentration in the market and the leadership. These companies are great companies, but they are very overweighting what's going on in the stock market, which can lead to risk and volatility if something happens and there is a reason for selling and diversifying away from these top 10, 11 companies. Thank you for listening. We'll be back on Wednesday. Talk to you then. Goodbye.